Indeed. Well, let's put the spotlight on the Indian healthcare space now. Indian hospitals are eyeing significant capacity addition. There are also, of course, lots of business houses which are making it clear that they want to enter the hospital space. We've heard announcements, at a high level from groups like the Bajaj Group, from the Adani Group, and others, of course, also indicating that they are interested. What does this mean for the existing sort of supply-demand dynamics? Let's bring in Ankit Thakur, who's CEO at Jupiter Lifeline Hospitals. Viren Shetty is Executive Vice Chairman at Narayana Health. Gentlemen, good morning. Great to have both of you here. Thank you very much for joining us. Viren, if I can start with you, Prashant this side. Sort of broad thoughts first up. Private equity and financial players have always been interested in this space. It's steady growth, lots of demand. But you're seeing more and more industrial groups, conglomerates wanting a piece of the pie. What do you make of it?
It's a good thing. This is a huge market. We are one of the fastest growing markets for private healthcare in the world and the most underserved population in the world. The more people that are out there making hospitals for people that serve the community, it's better for the country, right?
Obviously it won't be immediate because you'll need to set up, unless of course these groups buy out hospital chains. That's different. But if they're going to set up from ground up, it's going to take time, right? How do you gauge? Of course, there's no question, demand far overwhelms supply. But what about quality care? Sort of quality health supply, Viren. How do you gauge that with all these plans being announced now?
It doesn't necessarily compromise on the quality of care you're providing. See, the thing is, CapEx is just one of the levers in which you provide, that is adding beds and capacity infrastructure. The other is getting good doctors, getting good systems in place, training nurses. And invariably, you will have a system where the more hospitals there are, the more it naturally brings up the standards for the entire industry. And the fact that there are these very large business houses that are interested in it, obviously it's better for the industry because then maybe it gets more of a sense of organization to the place, and there will be a lot more interest in investing on healthcare as a lot of those input products. So for example, very little medical equipment is made here, very little consumables are made here. A lot of this is brought in from outside. The larger the domestic healthcare industry grows, the more entrepreneurs come in and start becoming suppliers to Indian hospitals. They're not just looking at export markets. So yes, long term, this is something that would only benefit the industry.
Sorry, my question, and that's a great answer, but my question more to make it clear was from a effective purchasing point of view. Affordable. The segment of population which can afford treatment at the kind of hospitals that you run, others run, etc. In that context, a lot of this supply starting to come in, Viren.
Yeah. So that's when you start to really get to the meat of the argument, right? The fact is, a certain amount of investment requires a certain amount of return. Those of us who borrow from banks, from private equity, or those of us that are funding it out of other balance sheets, you're looking at the return on capital. And the huge amount of investments that come up in land, building, doctors, and so on. If you're looking at it from a 10, 15-year perspective, there's a certain amount that you need to charge to customers to be able to recover that. If you're looking at this from a 25, 30, 40-year perspective even, then it's possible that you are providing something that's of net benefit to the customer, does not raise the overall prices of the industry, and you have customers who are getting quality healthcare at a good price. Whereas if it is the notion that this is something that in 10 years you're going to make a solid return on the investment, obviously you will make your customers pay a little more than what they're used to paying. But those are business choices. There will always be customers that are willing to pay more for the same levels of care. There will be customers who may be a little more price sensitive and will not be willing to pay more. And there is a market for everyone. And it's just that some of us play in certain markets and others that play in other markets.
Ankit, hi, morning. Come into the discussion. We've seen PE investments in hospitals before. Has the fabric of the DNA of the hospital changed after a PE player has come in, to your mind? And if yes, in what way? And also jump in on the argument that how PE players ultimately are there is a pursuit of profits. They're in to make some money, which could be a conflict with the idea that, healthcare should be affordable for all.
Well, I think for a long time, healthcare has been an apologetic industry. And I think that needs to be addressed and corrected. I strongly believe that integrity and business can both be used in the same sentence. So this whole notion that someone who is trying to make a return, as Viren was saying, is simply not bothered about any integrity or any ethical standard, I think I would like to disagree with. So going forward, yes, with PE coming, industrial houses coming, and the government especially signaling that healthcare could be a privatized industry, a lot of us listed on the exchanges, it is acknowledged that a return has to be made. But at the same time, I think it is also quite clear that the integrity and ethical standards have to be kept high. As far as affordability is concerned, I think the aspiration has to be to afford healthcare through an insurance system. Nowhere in the world a quality healthcare cost is within the reach of an average person out of pocket. So the aspiration for affordability has to be through the insurance procurement. And that is the way we need to look at it.
And have you seen the DNA of hospitals change after PEs come in with deep pockets?
I think each company has a different DNA. We, for one, have never had a PE investor on our board, so I can't really speak a lot with personal experience. But yes, each company will have a different DNA. I would not want to broad brush the entire healthcare and PE sector in this response.
Viren, you smiled.
Let's see.
Do you want to? Yeah, come in.
Healthcare as a public good is a public provision. And there is scope for advanced Western economies with massive tax bases that are able to support a large public healthcare system without the notion of whether this needs to be run efficiently or in a very tax efficient manner. We are seeing in real time the decimation of that business model, both in the Western world, the United States, United Kingdom, where large publicly funded healthcare systems are really lagging behind. The business of healthcare, see, healthcare is a modern enterprise like any other, requires massive investment, billions of dollars in R&D, huge amounts of digitization, huge amounts of work involved in providing very, very specific high quality levels of care that are simply not capable of being provided without a well laid out structure of incentives. You can no more expect the public provision of healthcare as you can the public provision of semiconductors or jet engines or any other modern industry. Now, let us not take away from the fact that people are feeling the pinch that in all parts of the world, the increased privatization of healthcare is causing a hurt on people's pockets. That absolutely is the case. But as with any industry that has large amounts of private sector participation, it opens up different business sectors for different participants to play in. There are those that would operate in a much more cost-efficient, low-cost model, and that will cater to a certain segment of the market. There are certain players that will say, we will play it to the higher end of the market and provide very luxurious accommodation and very fancy infrastructure, and that is fine as well. There should be different sorts of business models that provide healthcare. Now, PE in the end, like any other fund, if you say private equity, if you say SBI, anyone who's financing this industry is looking for the return of their money. It's just that the sources of capital are very different, and the business model we build around that have to cater to that. So we should not, as Amit was saying, don't be apologetic about the fact that there is investor interest in this industry. As customers, you should celebrate more choice coming in here. And the incentive structure, I'm not saying it will sort itself out. There is sufficient scope for regulation. There's sufficient scope for consumer choice that will create the best options for customers over here. But a busy industry with a lot of inbound investor interest over the long term is better for all of us.
I think that's well put. We could have gone on, but we are short on time. But it's an interesting conversation, which I think we will continue to have. It's a balance, as I think both of you put it. Viren and Ankit, thank you very much for joining us. Good speaking with both of you here on CNBC TV 18.